Hi, it's Terry Ryder from Hotspotting. On Saturday, I did a live interview on the Your Money program on the Fox Business channel. And essentially, they wanted me to talk about my top 10 list of locations around Australia where markets are strong and prices are rising, which was a refreshing thing to be able to do because mainstream media is giving us relentless negativity about real estate, telling us the prices are falling everywhere, and we know that's not true from the research that we do. So I thought I'd share with you the 10 broad locations that I talked about in the interview on the Your Money program on TV on Saturday, and not in particular order, but I didn't rank them from 1 to 10, but the first location I talked about was the Port Adelaide Enfield local government area in Adelaide, which I regard as the most underrated market in capital city Australia. This is an area that's characterised by relative affordability. Most suburbs in that precinct have median prices in the 400,000s and 500,000s. Vacancies are all under 1.5%. It's a location where $90 billion worth of contracts to build vessels for the Navy are taking place, creating lots of jobs and generating a lot of activity up there, and also 500 public servants being relocated from central Adelaide up to that part of up around Port Adelaide, bringing more demand to that market. And I highlighted suburbs like Rosewater, where the median price is up 8% in the last 12 months to 380,000. Greenacres, it's also up 8% to 470,000. Broadview, up 5% to 530,000. Figures that highlight the relative affordability of the suburbs in that part of Adelaide, particularly compared to our bigger cities, and also the fact that prices in annual terms are rising. The next location I broadly identified was the Moreton Bay local government area in the north of Brisbane, including the Redcliffe Peninsula, and highlighted the reality that Brisbane prospects are looking stronger because interstate migration figures are favouring Brisbane more than any other part of Australia. The general underlying economy is improving, and in particular the infrastructure spend is rising significantly in Brisbane, and recent surveys identify Brisbane as the capital city that investors are most thinking about in terms of where next. So the Moreton Bay precinct, very affordable. Most suburbs have median prices in the 300,000s and 400,000s. Vacancies are low. Some parts of that precinct benefit from new rail links. There's a new uni campus being built up there as well, and there are major jobs nodes nearby. So I highlighted the suburb of Beachmere, where the median price is up 10% in the last 12 months to 415,000. Also Kippa-Ring, median price in the low 400,000s, up 4 or 5% in the last 12 months. That's where the new rail link to central Brisbane begins. And the suburb of Launton, quite close to where that new uni campus is going to be, median price up 5% to 420,000 in the last 12 months. Then I moved on to talk about Perth, which I believe is a city of opportunity because while Sydney and Melbourne have been booming, Perth has been in downturn. So prices are pretty attractive, relatively speaking, but there are growing indications of recovery in the Perth market. So the city of opportunity, and our research shows that middle market areas, those sort of suburbs where median prices are somewhere between, say, 600,000 and 900,000, seem to be where there's particular rise in activity and the first signs of a return to price growth. And I highlighted the Stirling local government area, a little bit north of the CBD, so close both to the CBD and to the beaches like Scarborough. A major employment area of Western Australia as well. Some big shopping centre expansions going on there, so creating jobs and activity. Mount Lawley, its median price is now returning to growth. That's a more upmarket area, median price about 950,000. Double View about 700,000. It's also up 2 or 3%. And the Scarborough unit market is also showing signs of rising activity. Next, I spoke about Canberra. Now, I regard Canberra as the strongest real estate economy in Australia. And by that I mean, when you look at all the underlying economic factors, Canberra ranks number one. It's got it's one of the strongest state or territory economies in the country. It's got the lowest unemployment. It's got the highest average incomes. Population growth is rising faster there than anywhere. It's joint #1 with Victoria in terms of the latest annual population growth figures. And in terms of the property market, vacancy is very low, activity is rising. And I highlighted the Belconnen district in the north, where by Canberra standards, Canberra is quite an expensive city for real estate, but that Belconnen district has a number of suburbs where median house prices are somewhere in the 500,000s, which by Canberra standards is pretty affordable. And that area is benefiting from the creation of the light rail, an $800 million project, which has been underway for the last couple of years, not far off being completed and operational. And those northern precincts of Canberra are particularly going to benefit from that. And yeah, prices are rising there above the norm for Canberra at the moment. The suburb of Evatt is up 6%, McGregor's up 7%, and Holt has risen in the last 12 months 8%. The other 6 locations I highlighted were all in regional Australia. Right now, the strongest markets in Australia, regional Australia, and I think that the #1 single best growth market anywhere in Australia right now is regional Victoria. So I talked about Bendigo. Sales activity is rising. It's got a strong local economy, diverse, growing, population's growing, very strong transport links to Melbourne. And what I say about Bendigo, very similar to what I said about Ballarat, which was the next location I talked about. They're both very well linked to Melbourne, strong cities in their own right, affordable houses, most suburbs somewhere in the 300,000s, and both Bendigo and Ballarat are getting a lot of demand out of Melbourne, both home buyers and investors. Looking at the prices and the better rental yields, etc., it's conceivable to buy an affordable property in Ballarat or Bendigo and live there, but commute to jobs somewhere in the Melbourne metropolitan area, although you don't necessarily need to, because there are lots of jobs being created in both Bendigo and Ballarat. I highlighted suburbs in Bendigo like Heathcote, where the median price has risen 12% in the last 12 months, but still in the low 300,000s. California Gully's median price is up 10%, but it's still below 300,000. And Kangaroo Flat, which is 320,000. And the locations I highlighted in Ballarat, very similar things to say about Ballarat as to what I would say for Bendigo. The suburb of Winduri is up 22% in the last 12 months. Its median price has risen 22%, but it's still just 310,000. Again, reinforcing the relative affordability of these very strong regional cities, which are getting a lot of demand out of Melbourne. For that reason, Sebastopol, its median price has risen 12%, but still only 285,000. Golden Point's up 11%, and its median price is now 340,000. The next location I talked about was the Sunshine Coast in Queensland, definitely the strongest market in Queensland, boosted by over $20 billion spending that's ongoing in new infrastructure and also property development, with the $5 billion medical precinct the big game changer for the Sunshine Coast. It's evolving from being a tourist town to being a more rounded, diverse economy as a real regional city. And as a consequence of everything that's happening there, the top end of the Sunshine Coast market in particular is very strong. Sunshine Beach, which is the most expensive market on the Sunshine Coast, median price 1.6 million. Its median is up 36% in the last 12 months. Noosa Head units, its median is up 26%. Noosaville nearby, its median unit price is up 20%. And then in central Sunshine Coast, another upmarket suburb, Minyama, Canal suburb, median price 1.2 million. It's up 24% in the last 12 months. So once again, reinforcing the fact that contrary to all that media rhetoric about prices falling everywhere, the Sunshine Coast is yet another example of a place where the market is strong and prices are rising, including 36% in Sunshine Beach, the most expensive market on the Sunshine Coast. The next location I discussed on the Your Money program on Saturday was Queanbeyan, just outside of Canberra, effectively part of the Canberra metropolitan area. It's only 15 minutes drive from Queanbeyan to central Canberra, the CBD of Canberra. But it's actually part of New South Wales because of where the boundary line is drawn. So it means that you got the best of both worlds there. First home buyers can buy in Queanbeyan, accessing the incentives and grants and stamp duty concessions, etc., that are available for first-home buyers in New South Wales, but still be only 15 minutes or so from the centre of Canberra. So there's quite a lot of demand out of Canberra going to Queanbeyan, and we're seeing good price rises. Crestwood, the suburb of Crestwood, its median price is up 25% in the last 12 months. Most locations in Queanbeyan, not so much. The growth isn't as big, but still pretty healthy. Braidwood's up 10% to 500,000. Queanbeyan East is up 6% to 580,000. And so the Queanbeyan market's a little bit more affordable than mainstream Canberra, but very close to the centre of Canberra. And you can access those first home buyer incentives available in New South Wales if you're a first home buyer. Now the ninth location I talked about during the live interview on Saturday on the television program Your Money was Lake Macquarie local government area, which is part of the Newcastle region. And Newcastle's been the strongest market in New South Wales, generally speaking, for the last 2 years. Regional New South Wales is very strong overall. We recently did a location by location survey of all the towns and suburbs in regional New South Wales outside of Sydney, and found that 85% of them are having price growth at the moment. 85% of them have price levels higher than 12 months ago. Again, putting the lie to that general media theme of prices falling everywhere. Certainly not the case in regional New South Wales. And one of the best markets has been Newcastle. The city of Newcastle has been very strong. That growth has rippled out to the Lake Macquarie local government area next door. Strong population growth happening there. Infrastructure spending generally across the Newcastle metropolitan area. Compared to Sydney, very affordable. Vacancies are very low. And there's solid price growth happening in the suburbs of Lake Macquarie, including Swansea, up 5%, Cardiff's up 5%, Glendale's up 9%, Edgeworth's up 6%. And they're all places that have median prices in the high 400,000s or low 500,000. So relatively affordable, low vacancies. That market is strong and rising. And the final location I highlighted was Launceston as an example of everything that's happening in Tasmania. We have highlighted in recent years, the Hobart market continues to be the strongest market in capital city Australia in terms of where property is selling the fastest, where prices are still rising the strongest. But there's even more growth happening in regional Tasmania. Virtually, we recently did our location by location survey for Tasmania, every town and suburb in the state, and we couldn't find anywhere with falling prices, and we found a lot of places with strongly rising prices, and Launceston is probably the strongest one, the number 2 city in Tasmania. It's got a pretty strong and diverse economy, plenty happening there, getting a lot of demand out of Victoria. They look at the prices in Launceston and think, oh, that's great buying, because most suburbs have median house prices in the 200,000s or the 300,000s. Vacancies are below 1.5%. And the sort of growth that they're seeing, Invermay's median price is up 13%, but still just 280,000. Kings Meadows median price is up 12%, but still only 300,000. And South Launceston is up 17% in the last 12 months to 325,000. So those are 10 locations I highlighted during my interview on Saturday with the Your Money program on Fox TV. And they're all places where the markets are strong, activity's rising, prices are rising, including in many cases in double digits. And just highlighting for real estate consumers around the country that there's still plenty of growth to be found. And it puts the lie to the general media theme of prices falling everywhere. The problem is most of our major media emanates out of Sydney, where markets undeniably are down, and they're extrapolating the negativity in that market right across the country, unreasonably so, and there's an absence of balance, accuracy and fairness in the way media is reporting real estate at the moment. They're addicted to the negativity as well about headlines that are clickbait, unfortunately. So we're not getting accuracy or balance. So hopefully that provides a little bit of balance, puts a different perspective on real estate markets around the country, highlighting some of the opportunities that currently exist for growth. That's it for now. Terry Ryder from Hotspotting signing off. Let's do it again soon.